Hey guys, and welcome to SHAY'S Stocks. It is video 39 and day 27. Wild eyebrows again today. So, we have, let's see what time it is. It's nearly 6 p.m. 3 hours of trading left, 3 hours and 8 minutes to be precise. We have still got DUOLINGO. We didn't have the out of hours trading that I was hoping for. Just didn't happen because there's a lot of fear about DUOLINGO at the minute. So I watched as market opened and it plummeted again, which was painful, but as it started to go down I sold out and I waited and watched, and when I felt it was at the bottom, I know you shouldn't really try to catch a falling knife in the markets, but why not, you know? Seem to be quite good at it. So when I felt it was at a good level, I took a punt, bought back in. So it only cost us about like £4 to do the trade, which is nothing. And I think we lost about 30 quid while it was dropping before I got out. And I probably saved myself about 30 quid by getting out and then waiting and getting back in. So, you know, it wasn't perfect, but it wasn't in any way bad. I mean, I think our profit wise, we are over £500, so if I fiddle about with a few transfers and, you know, lose a bit of money doing it, it really doesn't matter. This is about what stocks you've got for the long haul, and with me, I like my entry level to be bang on. If it drops, I like to buy out, get back in at the lower level and have it in profit for longer and get those extra, you know, decimal places of shares that you get by buying in at that lower price. So that's what we did. I think our buy-in now, God, it managed to drop, which is good. I mean, a lower price is much better. I mean, we only got 8.1 shares, I think, yesterday. When I sold and bought back in because of a lower price, we got 8.5. So that could turn out to be quite a lot of difference down the line. Our buy-in price was 155 last night. Our buy-in price now is 148. So it's a significant difference, $7 a share saving. I know we took a bit of a hit getting that, but not a lot of a hit. And now we're in a position where it's gone back up. So I think all in all today we've not lost anything. We've got a psychological green cushion, which I do like. But it's a 3-day weekend now, and I've just got to decide if I want to keep them over the 3-day weekend or whether it's something we don't want to be a part of. So I've done a little bit of YouTube research and this is what I've come up with. I do believe I was correct about the fundamentals of the company, that it is growing exponentially. It's not shrinking. There's no reason to panic about the numbers, the growth. There was a little question mark over whether these AI translation devices that go in your ears like headphones, people go abroad, they don't need to learn the language, it can just interpret for them, whether people will want to use the app to learn languages anymore. Well, these things have been around for a while and the users' numbers are going up. So even though they're not going up to the degree they used to go up, they're still going up. So I'm optimistic that next earnings will be positive. The adoption of the AI means that they can introduce these new programs and make these new programs in months instead of years. So now they've got maths and chess and piano. Well, that's 3 courses. You know, in 12 months' time, they could have hundreds of new courses, appealing to lots of different people. And one guy, I think it's a bit mad, but on YouTube he even felt that there's a world in which AI teachers are a thing, and DUOLINGO would lead the way in that. So yeah, I think fundamentally it's the right company. Price-wise, it's the right company. Is it going to massively, you know, find a new low over the weekend? It could happen. But that's the nature of the beast. You know, once I'm in, I'm in. I know I change around stocks a lot, but things keep happening. You know, stocks are dropping to prices I didn't expect them to drop to, giving me an entry level that I didn't think I would get. And in this case, under 150, it's too good to ignore. And it's actually pulled me away from the GTA. area, which I was very keen on as well. So I'm more keen on this. So there we go. I think we're almost back up to 2,100 on the Duolingo balance. You know, if I decide to change that, close a business, the market shuts 9 p.m, but I can still sell my shares up until midnight if it goes down a little, or I feel like I have a change of heart or don't want to leave it sitting there all weekend without the ability to pull it if something goes wrong. You know, that will be a decision for the next sort of 5-6 hours. But as things stand, Ondas took a rock today. You know, it went down a whole $1.50. Don't care. It's still $3.50 more than we bought in for. So that's just a lovely cushion, and I'm fully optimistic that that's a temporary drawdown and it will just bounce back stronger for it. Novo Nordisk, which has been dropping a bit lately, has took a nice little uptick today, so that's, you know, made up for Ondas a little bit, and the quantum stocks have gone up a little bit today. So, you know, it's a nice selection where maybe one goes down and a couple go up and you just stay the same. You know, I have actually done a thing, a smart thing. I moved the Duolingo money into a tax-free ISA. So if you haven't heard of ISAs, they're basically up to £20,000 you can put on there, and it's tax-free. So really you want all your stocks on there, really, up to 20 grand. And then you do just for free sort of investing, which unfortunately I didn't really know about that. So I just put everything into investment straight away and didn't really consider the tax element of it. But apparently HMRC, they look at your bank accounts, they can see what you've got, and if we were to make a lot of money off this, we could lose quite a bit through tax. So although half the money is still tied up in things like Novo Nordisk and Ondas, because I don't want to sell those and end up buying in at a higher price with fewer shares, that'd be daft. So I'm going to keep them there until I do decide to sell out. For me, that's probably about $50-$60 a share for Ondas, and probably the similar, you know, double up for the others, and then maybe we can get out and move that money across into the ISA. But for now, we've just managed to cleverly move sort of half the investors' money across into the stock-free ISA and shoved it all in Duolingo. I do think that's a smart move. And we've still got the other half sitting there in those smaller stocks, smaller, higher risk stocks. So, you know, when we did this a while ago, I asked my investors who wanted to go high risk, who wanted to be more lower risk, and several didn't want to lose money. So we basically kept those in lower risk, and the reward has been less. But they're still to the good, you know, I think. They're still about 10% up on where they started, which is pretty damn good. 5%, 2 grand, 100, yeah, 5% up on where they started. So that's good. That's really good. And it's safe. I do believe Duolingo is safe. And, you know, but it's one of them safe plays that could explode as well. And suddenly they make their money time over time. So I'm hoping this one just goes up steadily early next week. Gets us that cushion that we need. 2,000 becomes 2,100, well, which it is now, 2,200, 2,003, and then it gets to about 2,005, and we're sitting pretty. And it can do whatever it wants, and we can even handle a market correction or a revaluation on the company. You know, it's not without its risks. You know, is Duolingo done? I believe not. I believe the fundamentals are sound. I believe it's a growing company. I believe they might move away from languages, which is 98% of what they do now, and make that maybe 50% of what they do by introducing all these other courses and opening up to a whole world of people with different interests. That's exciting, that's fascinating. And if it works, it could go up to being a mass growth company again with, you know, stocks instead of 148 a share could be 200 a share, 250 a share, 300 a share. 500 a share like it used to be? Let's say no, because, you know, you should never be too optimistic in the stock market, but why not, you know? So anything can happen, basically. You know, we've had a decent day, the market hasn't been great, and on days like that, when your money doesn't go down massively, that's a good day. You know, if it's a red market day and the stocks you've chosen are holding their own, that's a positive. So Ondas reacted to market, Ondas reacts to everything, good and bad. It's even had good financial news. They're expecting financials to be better than expected, considerably better. So that's why I expect this uptick to continue. But that news that they're going to have better earnings somehow just coincided with a bad market day, which affected everything. There's nothing inherently wrong with their company that caused them to dip by $1.50 today. And it's all good news coming out, it's just the market. And in that case, great, because it will bounce back, and that's what you want. So yeah, I won't take up any more of your time. I just wanted to give you a lowdown that Duolingo is still half our stock. It is a risky play, but I believe because of the buy-in, it's a safe floor. Remember those institutional investors we talked about? They're still there, propping up that level. It has gone down a little, and you know, there is that risk that it could go down another 10, 20 bucks and find a new level. That would be worst case scenario for us, and that would probably take us down by 100 plus quid. That would hurt, but it's 100 plus quid out of 2100 quid. That's not a disaster. Could we afford to take that hit when we're 500 up? Absolutely. And that's a risk we're taking. But I don't believe that's going to happen. Worst case scenario, we take a 5% hit. Fine. And a 5% hit is very likely to go back up. So yeah, do we believe in Duolingo? Do we believe in this company? I believed in it when it was 178 bucks, when it was 189 bucks, when it was 200 bucks. And I'm very glad I didn't buy in at those levels and watch it go down and down and down and be sitting there with a big red hole right now, which could happen. Has happened to others who are very despondent about Duolingo online, and it's caused this mass selling at the moment. I'm glad that's not us, but this is why I watch the market so closely every day, because that's not going to happen. You know, if my stock that I'm in drops 7% from our starting value, I will sell it. And then I've got the option of waiting for it to drop further and buy back in cheaper, or just ignore that stock altogether, realize that maybe I didn't get the right entry point and I was wrong, revisit that stock at a later date. There's a couple of stocks like that, and the ones we've got in, the GTA one, looked at it ages ago, missed the window, got back in the other day because it dropped, not to where I really wanted it, but close enough for me to get in, and now Duolingo's gone below the lowest price I ever thought I would get the opportunity to buy into. And that's why we've gone 50% of our stock. That's why we've gone so heavy. Yes, it could keep dropping, but maybe that's just an opportunity too. So yeah, long-term projections, plus they've got lots of things happening in terms of a new CFO who's a safe pair of hands. She's good, she's in finance, which I love. She's basically an accountant, worked in Wall Street. You know what I loved about Ondas, where you know, people high up, you know, the CEO himself was ex-Wall Street. He's a finance guy. That's huge for a company you're backing who you want to do well in the stock market. And now Duolingo have a CFO who's basically done the same thing and will be money-centered. Not entirely, because the CEO isn't money-centered. But she might bring that little bit of balance where she can question him and maybe bring her views to the table and make a little bit more money, which makes the shareholders happy, will improve the valuation. I think it's a really good appointment, but it was considered a safe appointment, not an exciting appointment, which is why probably the stock price has gone down. The market's hedging its bets because it could continue to go down. These might not be good appointments. You know, the index figures may be lower than expected. Maybe subscription numbers will drop. You know, there's all these maybes, and they're hedging their bets that it's going to be negative. But if it's not, you know, I'll be watching those earning days with our money in. I'm not pulling it and missing out if it goes up. What I'll be doing is earnings will come out. It's after hours, so we can still sell and buy when we get the news. If it starts tanking on bad news, I'll sell. And I'll wait for it to drop and I'll buy back in. Or more likely is it will go up, and we can just sit there rubbing our hands together, watching the pound signs go up and up and up. That would be cool, but I'm not expecting that. That would take a lot of luck for that to go exactly our way. So I don't need it to go exactly our way. I need to be in a position with a cushion where it might go our way, and if it doesn't, we can get out and get back in cheap. And that's what I've done with Duolingo now. I'm praying it just goes up. Doesn't have to go up huge now, just a little bit steady. Sideways and up, sideways and up. Set that new higher lows, keep it safe, give us that cushion, help us to breathe easy at night and not worry about it when we're trying to sleep. And then this could be a really, really sound investment. Fingers crossed, guys. I will keep you posted because you're probably as nervous as I am. Without a doubt, having that much money in one stock comes with its risks, but if it's a stock you believed in for a long time, you've done your research, you've looked at the fundamental, you've looked at the finances, you've looked at the growth, you've looked at the fact that AI is only going to improve its business and make what they do so much faster to execute and cheaper to execute. The long-term lines, even though it's causing some uncertainty now, the long-term lines could get it bouncing up the right way. Okay guys, it's a 16-minute video. It's one of my longest ones. I've just been waffling now, but I'm excited about Duolingo. I'm glad we've got in, and I don't mind we took a little bit of a hit today and got an even lower, because that's what I'm going to do. If we believe in this stock, that in the next few months it's going to be up, significantly up, don't worry if it costs you 10, 20, 30 quid to sell out and buy back in slightly lower. I wouldn't do it a lot because those little bits add up, but if it dips down and you got a gut feeling that it's going to keep dipping, get out, let it dip further, and when it starts ticking up, boom, get back in and hope that's the right time. Catch that falling knife. They say don't do it because it's going to cost you money, but if you get lucky, you can catch it just the right time, and we hit right at the low. I mean, if you look at the bar today, the bar's going down, and our line where we bought in is below that bar. So just as we bought in, started up ticking straight at the right time. So that's really cool. So anyway, yeah, I'm going to go. I'll leave you to enjoy your day, and I will catch you later. Take care, everybody. Bye for now. Thanks for watching another episode of SHAY'S Stocks.